Hey traders, in this video we're going to look at trading an earnings event. So I'm looking at GIS General Mills. This is the chart right here. They have earnings upcoming and we can actually see it here and on 12/17 before the market opens. So this week. The next thing I want to do, and I do feel like it's always good to look at a daily chart and see how the name trades on earnings. Last report, no move. Prior report, slight upside move. This report, very volatile move. This was back in March, so remember the pandemic. And this report, not much movement. So we can see just from a glance, General Mills is not a huge earnings mover. And if you look at implied volatility down below, very low. Price is neutral. Here's the 200-day single moving average, and very flat, we'll say, sideways pattern. The next thing I want to do is on Thinkorswim on TOS, it will actually give you the market maker's move, triple M market maker's move. And this time it's up or down, so higher or lower by $2.13. So what you can do is add 213 to the stock price. So that will give me about $62. And we'll just say 23 cents for an upside target. Downside target will be right around 58 bucks. 60.10 minus 213, we'll just say 58 bucks. Right? The next thing I want to do is look at the options. What you can do is look at the at the money straddle, which is the price of the calls and the puts added together. So the stock's right around 60 bucks. So we'll look at the $60 calls. They're about mid-market, probably 120. The puts are about we'll just say 120 to make it easy too. Probably about 110 to be realistic. And therefore, we'll look at that. If we add it up, we get about $2.40. And if we look at right here, this is implied volatility and the percent and the dollar amount move per end of the week. Remember, there's still 4 days left before December expiration. So we're pretty much spot on. And of course, the big earnings mover is going to be the catalyst to move the stock higher or lower here in General Mills. Therefore, if we want to play an upside bet, we can look at the call options, right? If we look at the 62.5 calls are around 30 cents, so that's what we call price to perfection. Add the implied move of earnings plus the stock price, so let's just say about 240 plus 60 bucks. That gives us about 62.5 bucks, right around there, and those calls are going for 30 cents. So, but a little bit of premium. The market makers are pricing in right there, right? Therefore, if we want to make money on these calls, we need at least 62.80, so 30 cents plus 62.5. And if we want to make money on the puts, we need 57.5 minus about 30 cents. We look at about $57 and about 20 cents to make money right there. The last thing I like to do is look at option order flow. If you don't have the Blitz scanner, which we're working on, or the Blitz market color, what you can do is look at time and sales, and you can see what are the biggest orders of the day. These look like spreads. So these, in my opinion, yeah, this is probably the 60 calls being bought. They probably sold the 62.5 calls. So it looks like they bought the December 62.5 bull call spread. And it looks like they also did the 55, 52.5 Jan puts. And it looks like they probably did a cheap 48 cents. Looks like they probably sold the 55, 52.5 bull put credit spread for January. So it looks like they did a bullish risk reversal, but also a calendar with December and January expiration. Whew. General Mills is widely held, so many funds own this stock. So that's a way you can look to play an earnings event, looking at the market maker's implied move. Also, I do want to point out, if you want to learn more about Blitz alerts here, there should be a link below somewhere on this page, and you will get full details on how you can join and become a Blitz member. Lance Ippolito here. Like, subscribe, leave a comment, turn on notifications, all that fun stuff, and I'll catch you on the next video.